Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it. It's generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me, it's at finding_finance on Twitter. And if you want to join our community, finding-value.com, we are running a coupon special. It's still May Day, 50% off the first month on a monthly membership to try it out. It's only for the first month. If you want, you can convert that into a yearly membership with larger savings with that coupon code if you're already a member and would like to sign up for a yearly membership. So we've got Josh here. He says, I was quoted in Reuters today, the EIA weekly report. It looks like we are back to counter-seasonal draws. This displays healthier demand and less robust supply than consensus expectations, said Josh Young, Chief Investment Officer. He says, if declines continue, oil prices may rise and OPEC Plus may return barrels to the market. And quoted to quite a supportive data set with draws across commercial crude and refined products supported by strong implied oil demand. So that's what we've got going on with oil. We did see draws of 9 million, it's between 8 and 9 million barrels in the inventory, commercial inventories. And then later on, we'll talk about how that feeds to the undervaluation of oil price. OPEC Plus could delay planned oil output hike scheduled for December by 1 month or more, OPEC Plus sources say. And this is, it says, by early November, expect OPEC Plus to delay curtailment starts until 2025. So they are delaying their output hikes. And I think that deals with where the price of oil is. I don't think it has anything to do with demand and supply. It is solely off of the price of oil of the barrels. And the one thing that's really weird is we have a huge disconnect between commercial inventory levels of oil and where the price of oil is at today. And the only thing that I see that could maybe explain that is that we've got elections on November 5th. So is something going on there? Is that what's causing this big price disconnect? So then the next question would be, what happens after the elections? Do we get a oil price move higher? Or, I mean, a lot of people don't look at the data. They just start making up crap. Like we could get a huge pullback in oil prices is what some people are saying. Now, if there could be something that occurs around the election, that they do a rug pull. Who knows? Who knows? But what I can tell you is, going back to my engineering background, I'll show you what the data is. I'll give that to you for the given information that we can say is historically accurate, and then we'll have to go off of that information. And I'll show you what that looks like coming up. Silver is breaking out from a significant descending channel. I like the symmetry of the pink consolidation labeled 1 and 2. 3850 is just the first stop in his opinion. The shoulder head shoulder, the breakout there, the projected move of 3840. I'm wondering where this line comes into play here. He must have taken this line there, and there, and then projected it upward. But I like looking at things from a bigger perspective view, maybe not so much zoomed in. When I look at silver, and this is silver here, I like putting it in just a line chart. And then I back way out like this. This is what I like looking at, this big, big picture. And I see a huge bull market here. I see a consolidation from here all the way here. And then I see a handle that is formed and that we've broken out of that handle to the upside. You know what else coincides with this? This here to 2020, which is right here, that was a declining interest rate environment. That's where silver is out of favor. Now we're in an increasing interest rate environment, and now silver, from this point forward, is in favor. So when I look at these things, guys, and I look at the size of this pattern, I just go, God. I mean, I don't want anyone to get too focused on the short-term market movements here. This little move there is he's focusing on this move there. That's the pattern that he's looking at. But when I look at this big picture view, I think we got a long way to go. Don't get afraid of the market movements. The big money is made by sizing up the big move. The big move here is the cup and the handle breakout that occurred in 2024 of March. That's the big move. Don't forget the big picture move. And this is what is burned into my brain. Now, here's something else, just to let you guys know. I've been watching this from here. That's where I started watching it. I started watching it in 2016, 2017, 2018. I purchased a bunch in this area here. I didn't purchase any in 2020 from at least the suppliers because they jacked the premiums up. I did get some from individuals that wanted to sell in that time frame. But the big picture here, guys, that is what you should focus on. Size the big move. The big move and the size could potentially be something that goes up to that level in here somewhere, 350 or whatever. And if you can capture just one of these moves in your life, you just need one. That's all you need. That's all you need. If you've got the symmetry at your back, you just need to capture one move. You don't need to capture this over and over and over and over to make millions of dollars. You need a couple of good picks, spread it across those picks, and then get one of them to hit big under a move that looks like this. So I focus on the big picture moves. I don't focus on the small 38.50, whatever. It doesn't matter what it does in the short term. OPEC Plus could delay planned oil output hike scheduled for December by 1 month or more, OPEC Plus sources say. So that's coming from OPEC Plus. Now, here's something that's really weird. A couple of Twitters ago, what did we see? We saw false information or news that was generated by insiders of probably our government come out and said that OPEC was going to increase oil production and start a production war with shale oil. And then OPEC, what actually came from OPEC, said that they are ready to delay output hikes. So if we are getting false information and it's all around the election and they are trying their best to hold this down, I want to show you the data because I find it really annoying that they're in here trying to manipulate all this crap. They can manipulate it for a little bit, but they can't for a long time. And I think OPEC is fighting back here. I think they're saying, screw it, let's just push it on back. Martin says, like I said, expect huge downward pressure on oil prices ahead of the November 5th election. Everything, including the kitchen sink, will be used by the Biden administration to hold those prices down. I completely agree. Completely agree. Because we're seeing it in the data. We're seeing it. Total commercial petroleum inventories decreased by 9.5 million barrels last week. And they're trying to hold this thing down. If you hold it down, you're going to increase this deficit. You're going to keep eating through inventory because it's at a price that it shouldn't be at. Silver production in quarter 2 of 2024. These are the big boy silver producers. Fresnillo's #1, KGHM, Newmont, Hindustan Zinc, Southern Copper. So a lot of copper, big copper, diversified mining companies. Mag Silver, Glencore, Pan American, Hecla. We've got Buenaventura, BHP, South 32, and then a couple of other ones that are smaller. Those are your big producers of silver Q2 2024. Northstar says something big is coming. 10 of these 12 key indicators are now in a bear market versus gold. The clock is ticking as capital rotation continues. So he's, I think, created this chart here of the 12 sectors. But I would also say that a lot of these hold quite a bit of weight. M2 versus gold, yeah, that I would use that. DXY versus gold, I wouldn't use that because DXY is a relative strength indicator. I wouldn't use that as a block. CPI versus gold, I would. PPI versus gold, I would. These are indexes though. That's the only thing that I don't like are indexes because they're kind of they're adjusted. So this is a big one. M2 versus gold, huge. Dow versus gold, huge. SPX versus gold, huge. Russell versus gold is big. SPX versus gold and NDX, NASDAQ. Those are the big ones. I also think that in a big bull market of commodities, you want to start to see outperformance against gold. So gold's going to be the leader. That's your first capital rotation event. Gold will start to break out against all these things. That's your leading indicator. Then what should come next is all the commodities are going to follow. And generally, the conditions that this occurs under is when the dollar falls and interest rates go down. That's what occurred in 2002. But generally, the dollar needs to get weaker. And when the dollar gets weaker, that's when the commodities that are priced in dollars go up a lot. That's the bull market. And gold is the front runner of that. So if you look at gold, gold is ripping. Look at that move. It's straight on up. With gold ripping like that, that's our leader, boys. That's our leader. It's ripping. And the rest of the commodity complex will follow later. So you got to have confidence in this move here. Eric Nettle says, demand watch, China has maintained road traffic levels above those of 2023 after the Golden Week holiday period in early October. This is significant because Chinese traffic has been consistently below 2023 since February. And there are market views that suggest China should be reflecting a slowdown in its economy right now. Are we now past peak weak Chinese demand worries? Maybe. There's 2024 versus the previous ones, and we are above those previous areas last year. They are above this year is above last year. Now here's the data. This is big data in my opinion. I like looking at this chart. It's something that I think is gathered from the market, and then you can fit lines and charts to it. So 14-month in total commercial petroleum inventories, excluding other oils. So week over week, we are down 6.1 million barrels. Implied WTI fair value price of $86 a barrel. We are $17 undervalued from the current price. Notice how we are starting to get away from the standard deviations here and start to fall outside of the areas here. We are very undervalued. The way that you read this chart in terms of fair value is you need to go straight up. So this is your normalized total petroleum stocks. You want to go vertical. So you want to go vertical, and then you hit the fair value price of 80. It was 86, right? $86, which is somewhere over here. So we're right there going vertical. Now, if you go to overvalued would be like $98 a barrel. And you can see that we've been overvalued in history too. So right now we are undervalued. Now, I just find it weird that there are articles coming out that are falsely claiming certain things and that we are this far undervalued right during elections. I mean, it makes sense, guys. It all kind of aligns. Okay, what's going on here? U.S. Treasury, we plan to conduct weekly liquidity support buybacks of up to $4 billion per operation. And I think they're talking about bonds. So they're probably doing buybacks. Is this the beginning of QE? Is this the beginning of QE? And is that why gold is running higher? Gold is front running this stuff that's coming because insiders know what's coming and then they buy it before it occurs. Then the oils and the fertilizers, all that stuff follow behind it by a good chunk. That money's got to get through the system. This is the money coming. That's going to be coming through the system. Oh, look, mommy, twins. We've got Super Microcomputer and AMD also getting sold off. Obviously, I think they are coming under some pressure here. AMD, I think, was an earnings release, and I think Super Microcomputer was with a delay of some sort of audit that's going on inside the company. Rock bottom entry. Today is when a new trader sell their positions in a panic versus adding at support. These kinds of days ensures rookies make zero money even in powerful bull markets. And he's talking about silver. Silver had a big move lower. Some people get spooked. They panic. They worry that the price moved lower. And that's all they see. It impacts their emotions. And what I'm going to say is that's when I look at this, guys, I look at that big picture. I keep going back to the big picture. Gold's breaking out, and silver's got the big pattern here that's got a long way to run. Focus on this. That's what you got to focus on, the big picture move. The money is made by sizing up the big move. The big move is coming here. We're already in the move. Don't let the small wiggles. Don't let the small wiggles get you out. The small wiggles, like these wiggles here, the wiggles here, the wiggles there, the wiggles there. Don't let that scare you guys. We're stair stepping higher on top of this. And that's all we're doing. We're stair stepping up. And if you need help with this, like find someone that can help you. It doesn't have to be me. But you've got a huge opportunity on your hands here in silver, in gold, in platinum, where if you need to calm your nerves, you need to slow down those emotions and think. These are big opportunities that are. This is not going to come in your life again. This setup started in the 70s. It was developed during the lowering of interest rate period here, and then it stopped in 2020 at that bottom right there. Now we're in a life changing move, and I don't want people to let this elude them. You won't get it again. It's not going to come again for maybe ever, especially ever in terms of people's lifetime, their lifespan and this moving. Narrative: the market is awash in oil. Reality: the U.S. Big Three oil inventories just hit their lowest seasonal level since at least 2016. There we are, lowest level, period. So, how is this possible? Well, it just so happens to coincide with the election. It just keeps coming back. Like all the data is showing that we're eating through inventories and that demand is strong, but yet what's going on here? We've got the 2 and 10s inverting and breaking the downtrend. What's going on here? We've got the 2 and 10s downtrend breaking to the upside. It's like, what's going on here? Are we going to reinvert this curve? And is that going to come from oil? Is the bond market pricing in an oil move higher because of our undervaluation and yields moving up? Is that already being priced in? Could we actually move on up again? This is the bigger picture view. I don't know. Let's find out. We're going to find out here a couple weeks. And yeah, what's going on with this too? Did something happen again today at 8:30 a.m.? Every time at 8:30 a.m. they try pushing this lower. Push, 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 push. This was rocketing higher, then all of a sudden it just reverses at 8:30. This happened before. It happened at 8:31, and there's your move lower of that other large selling pressure move in October 29. October 29, 8:30, down lower. October 30th, 8:30, here we are, ready to move lower again. What's going on here? This is very similar to silver and platinum and some of these other ones. It's like they've got the algorithms or something that come on and just say, dump it at this time. We need it to go down. Obviously, they weren't successful, but they were for a period of time. Here is Tavi. The 30-year yield is about to uninvert relative to the 3-month yield. To be clear, despite the consensus view today, previous changes from a negative to positive spread did not result in a soft or no landing scenario for the economy. And here we are heading on higher, just like all these other times. Now, are we going to see a recession slowdown? I don't know. They're playing with yields. They're printing money like heck, fiscal spending. This is getting difficult to read here. Obviously, I think there's some stuff going on with oil, the elections, lots of stuff's going on. That's what I'll say there. We got Kevin here, so let's read Kevin's stuff. Most people don't remember the 1970s. Even me at 54 was born in 1970. Gold went from $35 an ounce to $850 an ounce, or a 2,300% gain. Most people think it's crazy to think that could happen again. Say $1,100 an ounce from the 2015 low to $25,000 an ounce by say 2030. I think it's crazy to think it's not going to happen again. Pure fiat, massive deficits, massive debts, no ability to raise rates, loss of US dollar as central bank reserve currency is coming, and most people are going to find their savings crushed in real purchasing power terms, and their wages crushed along with it. It will be the strikes and fights that really get inflation cooking. Minimum wage is going to have to keep pace with food and energy costs rise. As wages go up, costs will all cycle higher. And it won't be transitory. It will be terrifying, in his opinion. And this is what the chart that he's talking about, a potential break here to the upside. It says, a guy emailed me, told me to check this out. Below is a monthly logarithmic chart of spot gold going back to 1979. Look closely, and what do you see? Well, if you take your high here and run it across the high that we hit in 2011, we are starting to break out of this pattern or channel or uptrend to move higher. And we could see a big, big move here. That is what the significance of this trend line break is. And again, I go back, I look at gold, I look at silver. Silver's got the big pattern. This here is your pattern of the cup and handle, and then the break of that pattern. What he's doing is he's taking this and running it. Now he might be running it here, but he's running it up like this. And running it right on the cross. Depending on where you go here, you're right at that potential breakout. And that's what he's running here. And you can also run it at the bottom here upward. So we're squeezing into, if you look at this, you've got a bigger move here. You've got a smaller move there. You've got a smaller move here. It's squeezing to the corner here. And this is where we could get a potential big breakout for gold to roll on higher. Some people say that rising wedges are bearish and that we're actually going to decline. I don't think so. And the reason I don't think so is because governments resolve these things through money printing and inflation. They don't resolve them in huge deflationary collapses. But that if we were to have a deflationary collapse, this could be a false breakout, and then we roll lower. But we'll have to wait and see. Another thing that we could do is run this thing massively higher, where we rip here, and we could do a retest where we come up, we break, and do something like that, and go to a level that is like way up here. $25,000 an ounce is up here. That is totally possible, and that's what the chart looks like looking at it. So very possible. Very interested to see if that happens. Now, if that does occur, guys, it's gonna pull the entire commodity complex up with it. All commodities will go. Gold's our leader. So that's what's coming, is what I'll say. But that's where I'm going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. If you guys want, you can sign up to the website. Mayday coupon code is still active. It's 50% off for the first month. And then you get a larger discount on the yearly membership if you want to sign up for a yearly membership, whether you're an existing member or a new member, potential member there. But that's all I've got for today, guys. We'll catch you next time. This is Finding Value.